to the rationalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello again, everyone. Welcome back to our daily brief at the Rational Investor. Brian here in the saddle. Got my trading garb on, my DGen TRI hoodie. Isn't that a cool hoodie? Look at that. It's nice and embroidered and everything. Looks super cool. And my old gnarly trader hat. Actually, this used to be JoJo, so it holds a very special place in my heart. I'm sure it looks awfully DGen. It looks probably pretty scruffy, but I try to hold on to everything that my dearly beloved used to wear and use and stuff, and I treat it like gold. Anyway, so welcome back to the frivolity. You're probably, if anything, hopefully I look like just a gnarly trader dude, right? Gnarly trader dudes are not pretty. Anyway, pretty wild day in the markets. Of course, was tweeting out lots about how I scolded everybody on the site yesterday to be damn careful with your money. This is not the type of environment to be going willy-nilly, just screwing around. And just being frivolous. And if anything, I went on quite a bit in the daily brief Afterparty show. Don't fight the Fed, you silly kids. And get off my lawn. Anyway. So, kind of a screwy market state right now. I wouldn't be surprised if the breadth indicators actually start rolling over. I've been very curious as to how this breadth indicator for the DI here has stayed as strong as it has. But you want to see something really funny? I mean, I don't know. I'll keep my pants on. There's always a bull somewhere. So went and picked up a little bit of this guy here off of this double bottom action. Already banged out one double, and if anything, what I kind of want to do is I'm trying to build positions for this coming I don't know, what would you call it? I don't even know what the best term to use is. Anyway, this coming bull market that I expect to happen in crypto into November 2025. So I don't know whether I really need to be in a big hurry to keep selling halves on doubles and stuff, but gee whiz, what a move. And somebody was sort of asking me the other day, so what's your annualized rate of return kind of thing? And it's weird. I don't really work that way. What I do is I buy stuff and then I just sit there, and you notice most of the time markets aren't doing anything. Every once in a while you get one that just goes ape poop, and this is going to be 100% return. So if I have 10 positions on and one of the positions just does 100% return, technically do I have 11 positions on now? And this one did a double and then another double. So does that mean that I have 12 positions on, right? And two of the positions that we can convert it into cash. So the cash balance just builds up. So, that's sort of the way I run my business. I hope some of you were able to participate in this. Again, I'm never going to tell you what to buy and sell. I'm never, ever going to do that. But I will tell you what I'm doing in the market. So that's what I'm doing. Come on! Always a bull somewhere, which is really interesting that this is happening right now, because our beloved little short setups and good old Bitcoin, actually, probably that one, but I think over here, this one's the best. That one right there. So the 3-step setup, right? This is what we're trying to teach you in our level 1 education program. In this particular case, Bombs for trade location. Nice head and shoulders top that came in right off that chaos level. So it's so cliche, ridiculous. And huge double divergences. I love big double Ds. Oh my God, do I ever love double Ds. And staring you right in the face. I love when the double Ds are staring you right in the face and they're just bouncing there right in your face. It's just awesome. Oh, I suppose. Okay. Anyway, this thing's just working away, doing its thing, and I've repeatedly. You like that one, Alex? Good, good. Hey, there's only like what, two people that watch this damn video, so I might as well have some fun while I'm at it, right? I love double D's. I love triple D's. Oh my goodness. Then now we're getting crazy. Anyway. Hey, Nick. Hey, I look over at the Zoom call and I see there's a lady in the Zoom call. Uh-oh. Oh, I shouldn't have done that. Anyway, good morning, everybody. Oh, well, Brian's just having fun. Anyway, so the point of the matter here is, these setups are just working away. They're doing their thing. Nothing really outlandish here. The issue here is you have to get to the point where you've seen setups. Oh boy, somebody's been offended over there on YouTube. Anyway, you've seen the setups so many times. You kind of go, I'd almost be an idiot not to take this trade. So that's the point you have to get to in this crazy technical analysis field. If you decide to go down this road, and this profession is, you just got to keep practicing and practicing and practicing, where you get to the point where you go, okay, I got location, I got divergence, I got price structure, I got to go. And then once you go, actually most of the hard work is done. Then all you got to do is just don't screw it up. And, if the market, I even said yesterday, it looked to me like the market wanted to come up and I'd have to be underwater and I might just get stopped out at a loss on this setup. It's a trader's life. But, interesting, about halfway through yesterday evening, where we're sort of watching in the lounge, all of a sudden the market just broke through the Asian session. So it was quite remarkable to watch that happen. And that's this setup. So this is an even better one because I would imagine, new people to trading, when this big green candle happened here, I bet you a lot of new people to trading all went uber bullish here. And actually, I was watching the video from yesterday back again, because I like to rewatch the videos and see if I said anything really stupid that I shouldn't have said, or, maybe I need to correct myself. And I even said yesterday, it was remarkable how the market jumped up. And this is the reason why the bot has to have 3 lower highs to risk against. It busted out this high. We often call that the noob stop on TRI. And then it sort of kissed this trend line from the underside, and then it just stopped. And then we just started melting back down. And now this position's back in the money. So it just goes to show that, this is a trader's life. You have to get to the point where you see the setups, you're comfortable with the setups, and you just got to go with it. Which is interesting because I didn't really see anything dramatic set up in the futures market this morning. We did take the opening range trade, although I was a little bit confused because we had other people in the room, and I don't know whether they were taking the opening range trade or not. But full disclosure, these opening range trades, they don't always work. And today was a good example where we had to book a 37 tick loss on the combined trade. So there was a nice, this is the opening minute of trade of the crude oil market. We ran up, we came back down, we busted through the lows, we started to work our way lower, and then they came up and they busted out the highs. Yeah, that's the way it goes. If anything, what I'm pleased about here is that, and this is why it's so important that you have to take like at least 20 trades on any new setup that you've sort of, conjectured about actually risking real money with. And those 20 trades have to be completely mistake proof. And, probably, I think Chris and I first started monitoring and tracking this opening range trade. I think, was it January when we started? What did we were doing it last fall? I can't remember.
We started mid-December, so towards the end of last year. Yeah.
Right. So first probably 20 or 30 trades, it was like, oh, mistake there. Oh, I entered the trade wrong there. Oh, I didn't do it. Takes a long time just to get to the point where you actually execute these things correctly. So yes, today turned into a losing trade, but more importantly, process goals. I felt good about the fact that I didn't do anything that was outside the plan. And plan doesn't always work. Sometimes you get stopped out. In fact, in an ideal scenario, I'm right 66% of the time, which means I'm going to have these losing trades 33% of the time, 30 to 40%. That's a big number. So anyway, that was our experiment on the opening range trade this morning. And also too, good thing, to respect the opening range trade. I mean, this market went zooming higher. We had oil inventory numbers come out about an hour or two after the opening session. And there was a huge drawdown. So maybe we'll get to that in a moment. So opening range trade was failed today, but I was pretty pleased with the process goals. No demon finder entries today. If anything, today wasn't a bad day. Computer is acting very agreeably. Actually, I made myself an omelet this morning. Ooh, I was living the life large. And did my exercises, push-ups, sit-ups, planking. What else? Anyway, I have a whole exercise routine that I have to go through while my coffee's brewing. So point of the matter here is that was on spot. And sleep was relatively good last night. It wasn't terrible. Sort of what was the economic backdrop, sort of the mood this morning? Europeans were feeling relatively positive today. Actually, I have the commodities on here. UK inflation came in a little less than expected, still pretty high. And this is the point about how interest rates probably aren't going to go down anytime soon because it's sticky, right? It's, they used cars prices went up. I don't think they're coming back down anytime soon. Now I'm hearing new car prices are going up. So the auto industry is really fucking us over here right now, inflation wise. And you want to see something that's scary. Although, geez, I could show you about 20 things that are scary. Look at the price of meat. This commodity, look at that damn market. This is the feeder cattle market. So meat prices are up like 12% on the day. Oh, Jesus H. Christ. So this inflation problem is not going away anytime soon. In fact, I might even argue one of the reasons why the market's selling off, and I think it was our headline today, was that we've got the FOMC minutes coming out here. I was actually had a bit of a bull div come in here about an hour or so ago on that big pump. And the rule, of course, is there's our downtrend line. If I can get a W on the other side of this to come in, I might take a trade. You can see we kind of waffled here a bit. Nothing really to work with too solidly, but there could be a W that comes in here. But why is the market down so much? And it started to sell off about midday yesterday. And of course, this is such a great example. Take a screenshot of this, journal this. This is Brian trying to make a positive difference in your guys' lives. If you really want to learn how to do this trading stuff, what are you supposed to think if you ever see the market smiling at you? And it's interesting because I even put out a tweet where I was yesterday. I said, I had to sort of put the fear of God into the community here today because I think people are taking this trading stuff way too lightly and just sort of poo-pooing this. And how ironic, right after I put that tweet out, a big fat M comes in on the stock market. I think there's a lot of politics about this debt ceiling debate and all that kind of fun stuff. I might make the argument up market. Institutions don't buy up markets. They're selling to the public. Remember, we always talk about that options expiry, the way they completely manipulate prices into Fridays. This past Friday was the 19th. So there's 16th, 17th, 18th, 19th, right up into these highs. And there is Friday the 19th. And, in fact, we even had a fun tweet out. Again, if you're watching this, hopefully you're here learning. You are active listeners. You've got your notebook out. Brian says, hey, pay attention to this. Brian says, write this down. Take a screenshot of this. I mean, that's what you're here to do. You're certainly not here for my jokes, that's for sure. But, we put fun tweets out like this. My job is to make sure as many options expire worthless as possible. Remember, 89, 90%, probably 90 to 95% of all put options are written by institutions. Joey Diamond, Goldman Sachs, all those people. So they bid the market up to make sure the put options expire worthless. Soon as that event is done, boom, back down goes the price. Does this have anything to do with the debt ceiling debate at all? No, it has nothing to do with the debt ceiling debate. This is, I mean, what's so ironic is that these adults, quote unquote, get upset at crypto for the blatant market manipulation that the kids are doing in crypto. And yet this is just as blatant. This is just as corrupt as anything that goes on in crypto. It's just that it's done through the derivatives market, which is basically as unregulated as crypto. And nobody says boo about the options industry. So anyway, go figure. All right, so point of the matter here, market's smiling at us. We know that the market was manipulated into that options expiry. Super cool. We have chaos theory. We could see exactly where the market was going to run out of steam, and it just ran out of steam exactly where it was supposed to. Back down we go. We could do chaos theories now going the other way, and oh, what a surprise. Here we are at chaos theory coming up against key support lines. So in my journal, and actually when I woke up this morning, we were sort of up here. So I was like, we don't have trade location. But as the more market is, so we've been moving along here, we're down about 1%. Remember, and actually this would be a good quiz for all the people that are watching on YouTube. Like, what are we supposed to see percentage-wise where it actually gets our attention, where the floor traders start going, ooh, you know what? That's actually a serious move. I don't even know if you guys even know the answer. Something firsthand experience. Okay. I'm not quite sure. I know what that is. But the answer to that is thank you, Meg. There, Meg answered it. 2%, right? And actually, hey, Constantine likes my jokes. There you go. Hey, Adam. Hey, Adam. So, you could argue that the stock market could double the size of its loss here, and the stock traders will finally start paying attention. It's interesting. You can see crude. That's why when I saw a 12% move in meat prices today, I can guarantee you a lot of floor traders are like, whoa, do you see what the hell's going on in the cattle market? Ay, caramba. Anyway, so it is interesting. I was saying earlier, and I suppose I should get back to what I'm supposed to be talking about. We have what are sort of the drivers today? As I said, first thing this morning, didn't really have a hell of a lot coming out of North America. Little bit kind of splotchy. A lot of European news. Germans are not, feeling so optimistic. And frankly speaking, we had Sjord on the Afterparty call yesterday, and he's telling us about how the governments, man, it's stunning. I would never ever want to go to Europe and open a business there. That it's just stupid. It's just you're setting yourself up for disaster. You want to go to Portugal and buy some cheap land, live off the land in the country? Okay, fine. But for heaven's sakes, don't go to Europe to do any business. That you're just shooting yourself in the foot. And I feel so sad for Sjord because his government just keeps screwing him over for left, right, left, right, left, right. It's just shocking. Anyway, and if anything, you got to hand it to Sjord. He sure keeps up, keeps his chin up, stiff upper lip, and all that kind of crap. Because I tell you, the people that are running his country, they're just not doing their citizens any favors at all. So, it's ironic that oh no, I better not get into it. I'll talk about it in the after party if you're interested, ask me. But you all saw Sjord's conversation with us yesterday. Okay, so Econs today, what was sort of on the docket for today's North American session? When I did this first thing out of the gate this morning, you can see there wasn't really much in the way of US Econs. The only thing that was sort of fairly significant this morning was oil inventory numbers. And actually, I even posted in the lounge, woo-wee, did these oil inventories move dramatically. Probably another anecdote about how strong the North American economy is. If we update this, you see Where is our Wednesday? EIA, here we are, crude oil stocks. Look at that drawdown. Woo-wee! So the market was expecting a build. We had a build last week. Remember, we were kind of saying, if oil inventories keep going up, then that means a sign of a weak economy. Somebody came down and draw down a ton of crude oil there. Just an absolutely insane amount. Look at that, eh? Boom! So, this is the scary part because I had sort of talked to you guys. I don't know whether I talked to you guys yesterday in the public broadcast about this, but I believe oil has got this massive bull flag working here. And now, based on those oil inventory numbers, we can justify fundamentally this thing working its way higher. You can kind of see from a day trader's perspective, I'm coming into some levels and I've got some interest here in hunting shorts up top here. And then also too, we talked about what is the level at which a commodity moves on the day that the traders are actually going to start paying attention to. I don't know whether you noticed there, you can see there's a little wick here. We were up that greater than 2%, and that's often a catalyst to get the traders to come in and start probing to the downside, or whatever the opposite of the move is. I think on the short term we had AB equals CDs, but sometimes AB equals CDs can actually translate into what are called alt ABCDs, where the CD leg actually goes to 127. And sometimes it can go all the way up to 1.618. And oh, gee whiz, look at that rally peak right into that level there. So I wonder if that's what's going on as well. You can see we do have 200 SMA on the 4-hour chart coming in. ATR level is a little bit higher. And we also have a naked POC from quite a while ago just floating out there. So I still actually think we could work our way a little bit higher here. But if we did stall out in here, because we did breach that 2% threshold, that would make sense. And if anything, this almost looks like it's turning into a shooting star. Maybe, I wasn't paying attention that closely, but it would be interesting if we looked at like the 3-minute chart, see whether there was a bear div that came in up top there. And whether we had Willie Stupid. So you can see market jumped up there. I actually even drew this little trend line. I was sort of watching, but I didn't really have any divs or anything. Willie wasn't stupid here. So there was our opening range trade that didn't work this morning. It's no big deal. Shit happens. But on that spike higher, I don't really have anything to work with here. And we'll just let this thing develop. My hunch, believe it or not, is the next sort of big econ for the day is actually and this is what I think the whole market is moving into, especially the stock market's down. We've got the FOMC minutes coming up here at 11 o'clock, right? So that's in about an hour and a half or so. And my hunch is that the market and the people that are trading stocks and all those kind of people, they really don't like the idea that the Fed is still justified in not only keeping rates up, but also too, potentially even raising interest rates further. So you can see stocks are coming off. They're not like egregious numbers though. Like you could very easily see Dow could be down 600 points here, and that still wouldn't be 2%. I mean, that's how ridiculous having these silly indexes as high as they are here like this is. And you'd have to see at least a 600-point movement in the Dow just for the traders to start going, woo, now there's a move. So yeah, we're just working our way lower. And unfortunately, like I showed you earlier, we got these big fat M's staring us in the face, especially in the stock market. So it's awfully tough to do a hell of a lot right now in the market. And if anything, interesting, there's ATR levels, there's 877s. Like I said, we're coming up against all these horizontal support and resistance levels, or I guess support levels. Let's move that guy down there. So actually, once the minutes are released, I might actually be looking for some sort of dead cat bounce. That's a pretty one-directional move. My hunch is we probably trade down to this 877, then rally back up and kiss this 4669. I often see these fog and bomb levels do that, and actually gold did a really good example of that just the other day. think you can see it on the daily. Notice, we drew this fog and bomb, I guess, off of this range here. So this sell-off, counter trend rally, just this little fog and bomb here. I suppose you could probably go down on a 4-hour chart and see it. Just this range fail, this M, and then fail. And then notice, I thought this was super cool. Again, half of the reason why I do these things, trying to make a positive difference in this world, trying to help you, educate you. And of course, if you need some personal guidance, maybe consider joining the site and joining our sort of structured education programs. But if you can learn off these free videos, then awesome. And it's a win-win. Notice how we came down, puked out. We hit 2.618. Then we went right down into 4669, which I had noted was just a killer level because we were right up against these support levels. Had a dead cat bounce, and look how we bounced right back to 2.618. And then all we did was play ping pong. So we went doink, 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 doink. Isn't that incredible? I mean, is that worth learning? This whole chaos theory? I think so. That's incredible. So, yeah. Oh, geez, that time went quick. Did I even say anything of value today? Did I mention the fact that I might have to sell another double here today? Hey, we got Eddie. Eddie's in the lounge here. Eddie, yeah, I'm sure you got in on this thing, eh? You must have some of this on the books, eh? But damn, eh? I haven't even talked about crypto. Well, actually, I did a little bit. So anyway, to finish off the conversation about the broader market. Oh darn, now what have I done? Where were we? Here. I think the market's selling off into the Fed. We got the Fed minutes. These are basically what they talked about at the meeting, last Fed meeting, right? And you can come on sites like this and read up. Okay, what the hell are they saying? Blah, 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 blah. The way that crude oil's acting here, the way that meat prices are acting, the way that car prices are acting, I can't see the Fed slowing down here. It wouldn't make any sense. Now this oil inventory number, that is a very, very bullish inventory number. And in fact, actually, you could even make the argument the M top and inventory started back here. We had a little bit of a W. So I do remember a week or two ago kind of going, oh, geez, maybe the economy is slowing. We just got an unequivocal, nope, there is still tons of demand for crude oil, regardless of what all these damn woke politicians and protesters are saying. There you go. That's interesting. So I guess somebody wanted to add something to the conversation there. But anyway, point of the matter here is that that's a pretty darn bullish report for crude oil. Fundamentals, inventories being drawn down. So the point, I suppose, with all of this is that I don't think that the inflationary pressures are going away. I think that the U.S. economy is extremely strong. This is not the time for big government spending. If anything, government should just get the hell out of the way. They should recede into the background and just let all of you and I, consumers, just do our thing. And interesting enough, you can see the US dollar itself is just ratcheting higher. Why? Because the US economy is strong, and I think it actually supports higher interest rates. So there's a lot of incentive for international money to get the hell out of, commodity-based currencies. Look at these commodity-based currencies. Did Brian not say something about the fact that I think that these commodity countries are shorts? They're sells. They're get the fuck out of these countries as fast as possible. Get your money out of there because they're a train wreck. And actually, I put up a report on social media today. This is the anatomy of a train wreck. And ironically enough, whether it be Bitcoin, and you hear me barking about, M tops and Bitcoin price. I think we had actually, there was a really cool one that I did. Oh, darn. Come on, Brian, let's see if I can pull it up here, right? Something along these lines. There we go. This is exactly the same image. It's the identical image. Big smile. What are we supposed to think if we see markets smiling at us? And now trend continuation. This is sort of the initiation of the trend. This is trend continuation. We are now officially into the greed cycle, people, which means that you should be US dollar bullish and you should be commodity currencies like substitute drama teachers. And the worst part about it is substitute drama teachers are actually even undermining us more by blowing up our budgets and our deficits. You can see the market started to smile at us heading into that cycle peak. This is everything that I teach you in the level 1 course. We transition from a commodity bull market to a commodity bear market, and currencies lead everything. And this is a classic commodity currency, the Canadian dollar. So interesting. This is exactly the same setup as what I'm showing you here on a Bitcoin 4-hour chart. It's identical. That's the irony of it all. Oh, look at that. Eddie says that's a double. You're right. Excellent. Titan in the lounge says Shod number 2 sold on ARPA. Well done, people. I gotta say, TRIers have been doing pretty damn well in this market. So congratulations to all of you. Way to go. My double level, you can see I bought at 0.03. So I do have to see above 12. And anyway, you can see where I am there. But congratulations to everybody on the site who did well on this. Way to go. When I saw that this morning, I was like, wait a minute. I thought we're in May. What's going on here? So just goes to show there's always a bull somewhere. So, all right. So if you're watching the market and you're looking for direction, you're trying to figure out what's going on here. Obviously, we got the Fed minutes coming up here shortly. Interesting how that crude oil market's calming down. I think everybody's all sort of like, oh my God, what's the Fed going to say? And I think what they're going to say is we just got to keep raising interest rates until this inflationary pressure abates. And that's the last thing that stock investors that are risk takers. You know, yesterday I went on at length, don't fight the Fed. And, you know, if you need a graphic illustration of this, then do yourself a favor and create this Fed spread chart. It's so easy, folks. But just don't fight this. Turn the stupid TV off. Turn the talking heads off. They don't know what the hell they're doing. And just listen to the market. You see this euro dollar market. There's no W's anywhere in sight. Don't fight the Fed. All right. Have yourselves a great day, everybody. PMA for the win. We'll carry on this conversation in the after party. Slow and steady wins the race. All the best. Hugs and kisses. The only left price is bye for now.